Mr. Damani, a happy Diwali to you, and thank you so much for joining in. Mr. Damani, it's been well over 10 Samvats of a proper bull run. At what part of the bull run are we at this point in time?
Yeah, first, thank you very much for your kind wishes and your very kind words. It's always a pleasure to come and talk through your public airwaves to the investing public. So let me allow me to wish them also a very healthy and a very prosperous Diwali. Yeah. Because that's what we hear about. The stock market is one place we all come to earn money. Right. There's no other thing. Yeah. So it's very good out there. Where are we in the bull run? Look, there is some evidence to suggest that the bull run is tiring because the market was not responding to good news. New highs were going low. There's general feeling of drift in the market. But I think it seems more and more like a classic consolidation within a bull market. Right. So I think we might be sideways in terms of time and price for another few months. Before January, a new outlook, new flows will start looking up at the market. Right. So my feeling is that the bull market is still alive, but it will take some pause. You know, say in the soft drink industry, the pause that refreshes. Right. So probably it's the pause that refreshes.
So sir, that leads me to my next question. Over the last 15 years, and after maybe a decade and a half, we've seen resurgence in real estate. A lot of PSU sectors, subsectors are doing very well. Of course, since then, we've seen a little bit of a correction in the markets and they've come off. Here on, what are the leaders that you anticipate that could perhaps, take these markets forward from here on?
Well, typically I have a very firm belief that once leadership is established in the bull market, they will continue to lead in the bull market. So I would not be shocked if PSUs made a comeback, and maybe not the old PSUs, but some new, the wide plethora of choices in PSUs. So maybe some other of them will pick up steam out there. So while some of them seem at least overvalued to me for the short run, I'm not sure they're done for the course of the bull market. Right. In the new themes that you ask for, I've said repeatedly, we're very bullish on the public digital infrastructure space because what India is being transformed in front of our eyes is a digital country. When you go to the airport, the biometric check that lets you straight in, the KYC is all electronic, the ONDC is revolutionizing e-commerce in India. So a lot of companies that are now participating in that area. Right. And I feel they will do well over the next 5 years, 10 years. So don't look at it from a next 1 year point of view, but over 5 years, you'll see a complete transformed digital India, and it'll be on the basis of this infrastructure companies. Right. So that will be one theme I would look for over the next few years, not necessarily for the next 6 months or 1 year.
Absolutely.
The other thing is that surprised me myself because I've never been a big votary of the pharma sector. But if you take out the headline companies in India, the Dr. Reddy's and the Divi's, which are doing very well and are fabulous companies, but look at the mid-cap space, there's, for the first time, intellectual property being developed by these mid-cap companies. Right. For example, vaccines, antibiotics, anti-obesity drugs, which is very unique, in my opinion, for Indian companies to do. Because generally doing contract manufacturing, reverse engineering, those kind of skills. So these companies are pushing the envelope and doing intellectual property, and they're fairly modest market cap. Right. So I think again, you take a leap and say, I want to be in this company for 3 to 5 years. I think you could do probably well in that.
Mr. Damani, given the fact that we are in a bull run, we've been in a virtuous cycle where there's plenty of liquidity. But investors usually find it very challenging to hold on to cash for relatively longer periods of time. At this point in time, a lot of these investors have booked profits, and they're sitting on a lot of cash, but they're not comfortable placing their bets just yet, maybe because of valuations. What would your suggestion be to them?
I'm in the same group. Right. The first time I've been almost fully invested all the last 4 years. So the first time I've taken some money off the table because I was feeling there was some froth building up in the market. The IPO market had become red hot, which is generally a sign of the market in the secondary market cooling off. But as you also correctly pointed out, I'm very uncomfortable holding their cash. Yeah. I want to deploy it again. And I'm finding, more challenging valuations. So I'm looking around, waiting my time. Generally, it's been a bad idea. I mean, there's a saying, of course, that cash is king. Right. But generally, it's been a bad idea. If you've been in the Indian markets as long as I've been, I came in, if you remember, when the index was 800. Today, it's closer to 80,000. Yeah. So it didn't pay to be in cash. It paid to be invested in equities. Right. And equities give you dividend. And you have to learn as an investor to ride out the volatility. Right. So while I am sitting on a little bit of cash, I'm not necessarily the most comfortable man around. And I'm looking with both eyes, ears, and hands open for new investment ideas.
And in the meantime, it's still equity, or are there other avenues in which you want to park your cash while you decide?
That's an easy answer to me. I'm always either in equity or just some amount of cash.
All right.
The real estate, the jewelry, whatever the family buys is not included in my wealth.
Right.
My jewelry is my demat account, and I firmly believe that the best equity class in India for the last 30 years and for the next 10 years is probably going to be equity.
Mr. Damani, the way we invest now is changing because of technology, because of decision making becoming a lot faster. We have computers do the basic research for us, and then that's when we come to. What difference do you find between you and perhaps the next few generations in terms of the way they carry out decisions?
I think a lot of people are concerned with quick money.
Right.
And in my humble opinion, that's the saddest part of the market, because if you make a $20 profit in a bull market, you sometimes don't understand the stocks go up 10x or 20x. So it's a pretty stupid way to play it. I mean, you might be happy with 20% gain, go out, party with your friends, buy a dress, take a holiday. But sometimes you miss on life-changing opportunities to make wealth, which is what a bull market presents to you.
Right.
So my advice to people is, while you might want to trade because that is a bit more fun, a large percentage of investment, which is long-term investing and compounding. You want to compound that portfolio at 21, 22% over your lifetime of investment.
Right.
And if you do that, you'll be very, very rich at the end of the period. Trust me, do the compounding math, it'll tell you out there.